This conference will now be recorded.
Good morning, everybody. This is Greg Morton. It is Sunday, April 23rd, 2023, and this is the weekend video update for Canslim growth stock investors from the Greenville Eastside IBD meetup group and the Stockyard meetup group. So as always, this is for educational purposes only, not recommending any stocks or securities to buy or sell. And particularly now, all investing has substantial risk of big losses. So we want to learn first and only then invest. And of course, Canslim is Bill O'Neill's system and is a registered trademark of Investors Business Daily. So today, as always, we'll look at the M factor and current market review. Number two, talk about some action plan thoughts as this chop fest meat grinder market continues. We'll look at a new concept, which is kind of the dream team or the Elite Eight now. I'll go into that in more detail. And then we'll look at our upcoming monthly online meeting in May, if you're interested in signing up for that. So the M factor, as O'Neill teaches us, we always want to diagnose, we want to interpret, we don't want to predict. And the M is the most important letter in Canslim, and we want to look at three things. What are the leading stocks doing? Setting up, breaking out, making traction. That's what we want to see. We want strong Canslim stocks. So that's both fundamentally and technically. And even if you missed them, you need to know who the leaders are because we get clues on the health and strength of the market by watching those. Actions of stocks owned. So we'll look at the group teaching portfolio, which I talk about in more detail at the monthly meetings. Doing okay, not not great, not getting killed either. So in this market, I think that's fine. And then the market pulse in the paper, distribution day count, and price and volume on the indexes, along with the other factors that I um, compile in the coloring book tracking, which is just sort of my study of the market each day and my decision on where I think we are, the interpretation or the diagnosis, in other words. So let's look at the actions now. We'll look at the index charts and the coloring book and the group teaching portfolio. So let me get out of here and go over to MarketSmith. So here we are on the NASDAQ. This is the daily chart. Here was our follow through day recently and our subsequent follow through day. And we kind of just have been, moving sideways since then. Not making much progress. Can't push through this prior high and start going up. Our S line's still trending a little bit down, but it's interesting. Let's just look at the weekly on this one too. Um, Looks real constructive and tight right here. Now it is wedging up a little bit. Volume's going up as we're going sideways, but almost have a 3 weeks tight, and we might have it. I'd have to check the percentage. 0.29%. And yeah, so we have a 3 weeks tight on the NASDAQ weekly chart. So we're watching for this. It can't do this forever. It's going to break either up or down. So we'll see what happens. But on the daily, we do have the moving average line stacked in the correct order, holding above the 21. So that's good. 10 showing a little bit of weakness, but that's pretty short term. So we'll keep an eye on that. S&P 500, similar, fighting, even staying above the 10-day. So making some progress there. Let's see the weekly on it. Yeah, same thing, fairly tight with a little bit of wedging up. NYSE, got the moving average lines back in the correct order. So that's the problem now. The indexes, these four are actually looking okay, but underneath the surface is like there's an underwater volcano down there. Russell, okay, this looks bad. In fact, we have the 50 coming down over the 200, which is called a death cross. It's not really part of the Canslim system, but it is a technical indicator for that to happen. There is some drag on the market. So we see the small cap not looking good. Moving average lines are not stacked in the correct order. And we're going to see the same thing on the S&P 600, close to having a death cross on it. So small caps are definitely not leading now. We do like to see them lead when we're trying to come out of a difficult market. And if we look at the coloring book, again, this is not, a lot of it's constructive, which is weird because the stocks aren't doing well, just the indexes are. So I have 8 buying days and 6 selling days. So that's constructive. That's flipped back to green. We don't have a really high distribution count. We have 3 on the NASDAQ and only 1 on the S&P 500 and the Dow. Um, Russell and the S&P 6 are the 2 weakest. They're still yellow on the MMTS system. The first 4 are all green. IBD's green. Market school exposure is at a maximum of 7. It never goes higher than that. And the power trend zone. Window of opportunities open. But when we look at new highs, new lows, we have a trend of new lows on the NASDAQ. And we'll talk about this a little bit more. So this doesn't look bad. It's just not making any progress in the market is the problem. And if we look at the group teaching portfolio, go back to the dashboard page. So actually positive on everything. So that's good. ON, ONN or own cloud running on the buyable gap up obviously has worked very well. That one's making nice progress, up 7.5%. The short positions in Fryer Battery are making nice progress. Those are puts. And then the other ones are sort of hanging in there. The only one that's even more than a full-size position, though, is own cloud running. All the rest are less. I mean, Dexcom's only a 10% pilot position. And we are 45% invested in this teaching portfolio and actually barely flipped to green, but that's being better than barely red or even slightly or a little more red where we have been most of this year. So seeing a little bit of progress there also. So let's go back over here. We covered that. So bottom line, has been a tough market recently, just really grinding us up. So it really started back in February 2021 was sort of the top and the high-end growth names, ARC, that sort of thing. The peak on the NASDAQ chart was actually right around Thanksgiving 2021. So whichever date you use, one of them's 2 years plus and the other one's 17 months. So that is long for a bear market. Still quite the chop fest, as I said, with this. It's almost a daily rotation, it seems like, from one group to another, from big cap to mid to tech. I mean, from slow growth, the Dow stocks over to tech all of a sudden, and then back the next day. So it's just very difficult. And I was going to sort of emphasize this weekend sort of 2 new things. And I say new in the sense these have sort of come up in the last couple of years. They were not discussed in Bill's book. They were traditionally not part of the Canslim indicators, but these have become important on the M. So the first one is percent invested. So that concept is in the market school model, but that really just, it runs from 0 to 5, and those are different percent invested. So that's been around, but you have to subscribe to Leaderboard and have taken the market school home study course to even see that. So a lot of people don't even see it and don't track it. I have it in the coloring book. I told you it was at a 7 now. So it goes to 5, which is 100% invested, and then it has some add-on sort of like super factors or something added in. Said it had it, but now it's much more detailed and much more involved. So even IBD has started giving a recommended percent invested. Like if you're making progress, they'll say, hey, 40 to 50% invested in being cautious. So this is sort of new, and we also see this from other people. Some on Twitter, Matt Caruso, and for his subscribers talks about this. And so I don't think anybody now is saying, hey, you ought to be more than 50%, unless you were in all the leaders and you were making progress in all of those, if you happen to catch all of them currently. And then the second thing is this new highs, new lows indicator. I mean, this, to my recollection, is new within the last 2 to 3 years. the underlying thought is you have to have new highs over and over to be in a new bull market. And I mean new highs exceeding the number of new lows. I didn't write that very well. So it's a new high, new low indicator. And you want to see those new highs clocking well. Matt Caruso even talked about how it's really helpful and studying history. You would have more than 50 per day. I mean, you have 8 or 9 thousand stocks in the market. So you'd like to see at least 50 of those making new highs on any given day. So the two big proponents of this, or that I've learned it from, I think I first saw John Boyk doing it on Twitter and tracking it and even giving us the calendar where he wrote them down. And some people will do them on the indexes across the board. I think it's probably most valuable to do it the way Matt does it. He looks at them on the NASDAQ. That's the key indicator and the one that it would have kept us from getting overexposed in this market. So these are the two guys. Now somebody else may have come up with it first, so I apologize if I missed somebody. I'm just letting you know when it came to my attention. And again, then IBD has picked it up. In fact, Matt just was on the podcast. I'll put the link after the YouTube video where you can listen to that for free on IBD, and he was talking about that with Justin and Arusha. So that's well worth listening to get some more insight on that. So I just point that out because those are providing us valuable information at this time. So current market thought for me, this is not the market we're looking for. Now in Star Wars, it was the drones they were looking for, but this is not what we're looking for still. So any increased exposure, I mean, it may, better be on a nearly perfect entry on a nearly perfect Canslim stock. And I go back to, I know there's so many indicators in the Canslim world and on the Market Smith charts, and there's 40 or more different things that we look at, and everybody wants a litmus test indicator, and there's not one. But I do go back to what Bill said. So I heard him say this twice in two old webinars, and it was when Scott O'Neill was interviewing him or hosting the webinar back then, and he was sort of pressing him on what's the leading, what's the litmus indicator or what's really important, that sort of thing. And Bill's explaining, hey, there's no one single thing. And then the way he said it, I think Bill got a little bit frustrated with it, and he basically said this. He said, let me tell you this. Let me make this simple for you. That's what he said. Let me make this simple, or let me make this easy for you, which is what everybody wants. He said, if a stock does not have 40% or more is better, but it does not have 40% earnings growth in the last quarter, it does not have the characteristics right now to be a true market leader. Now, that didn't mean it wasn't going to be a true market leader in the future. It didn't mean it wasn't going to get to that level, but that earnings growth is what Bill really zeroed in on. And so I think that's very important. And you almost could say, hey, I don't want to enter anything unless I see that kind of earnings growth, um, just to limit what I'm doing now. And it's perfectly fine to not increase exposure, or to, again, don't take, even if you're just lightly in, it's okay if it's not working and you're not making progress. If, like the group teaching portfolio, you're making some progress, maybe it goes a little heavier than 50%. And I'll talk about a place where it might could do that this week. So again, you just have to really focus on and decide what percent invested should I be in light of the current risk reward situation, current holdings, cash percentage, that sort of thing. And everybody has to make that decision on their own and then do post analysis and try to handle it better the next time when we're in one of these markets. So the current market picture for me is the thinker, because this one's taking a lot of thinking. We're stuck in study hall. We want to take advantage of this timeout when the market gives us a timeout. And we always, always, always want to do the weekend routine. Maybe even spending a little more time on it than we normally do to really drill down and try to find the best of the best. This weekend I had 33 or more on my first pass watch list going through Market Smith and the newspaper, and then I'll narrow that down and split it up into my tiered watch list system that I do. So other things for you to be doing. Um, instead of watching the charts every day, every minute of every day. Join an IBD meetup group, go to their monthly, or some of them have, I know Alex Marinko has bi-weekly meetings. Can be mine at the Stockyard, can be Alex's, which I think is the Pasadena meetup group. Roy Maddox in Charlotte, he and his son Wes run a great meetup. John Pocoroba in Boston runs a great meetup, and there may be other ones. The district in Washington has a good one that Richard Moglen's involved in. So go to some of those meetings, spend a little tuition money to get educated instead of giving it to the market. Read books. Any of these are clearly the top ones on most people's list. Bill's book, How to Make Money in Stocks. Most Canslim investors read that at least once a year. Livermore's Reminiscences of a Stock Operator, Darvis, How I Made $2 Million in the Stock Market. The Perfect Speculator is one people don't mention a lot, but I really, really like. It's not that long a book. And of course, The Life Cycle Trade, which focuses on IPO, but really trading growth stocks throughout their life cycle. So I think those are great. Those need to be on everybody's bookshelf, and they need to be marked up and highlighted and reread. Go deeper, take a graduate class. Trader Line's IPO class was great. John did one on buyable gap ups. You can join Matt's service or take his course. Is great with good materials, and there's other ones out there. Ropel has one, Minervini has one. Some of the U.S. Investing Championship winners are high performers, have them. Find which one fits you. Don't join all of them. I belong to Matt's just because he has been in the business and has professionally traded, and he has taught on the university level. So for me, the rare combination of an educator and the experience is very valuable. And that's just what works best for me. You got to find what works best for you. So long term, my outlook is still super optimistic. We're going to get in Prince mode at some point. We're going to party like it's 1999. After a bear market, which we've had, it's been deep and long, we're going to have a strong bull market down the road. We just don't know how far down the road. Just don't know when the follow through day will be the one that just launches the next bull market. So this was sort of a new concept that I did this week, and I thought I'd share. I normally would do this in my monthly meeting, but that's a couple weeks away, so I'm going to go ahead and do it. So I was thinking about, you know, if the market gets going, what are the stocks I would really, really like to own if I could, the ones I'd want to be in. And so I decided to come up with a dream team or elite eight just right now. It can change. So this list does not mean these are actionable. This list is assuming the market was not bad and assuming I could enter these stocks properly and scale into full positions properly. Then what are the eight I would want to own? And again, this can change as time goes by. So this is just sort of a leaders list, strong stocks list, helps me track these. So what do I think are the best of the best in the Canslim universe right now, even if they are not actionable? And why eight? There might not have been eight out there, but I did find eight. So Canslim is a concentrated growth stock investing system. Most CanSlim investors say the ideal portfolio size is 8 to 10 equally sized positions. We don't start out at that. It happens over time. And so in a new bull market, it's progressive. In fact, you might get up to 12, and then it gets culled down to 6 to 8 as time goes by. So how does it get culled down? Well, there's several factors. One, we're supposed to be taking all or some profit, so the 20% profit goal at least 80% of the time, because O'Neill teaches us that out of every 10 Canslim stocks properly bought, only one or two is going to be a true market leader. So that means 80% of the time, we've got to be taking profits at the 20% profit goal, some or all. So only one or two and eight is a true market leader. Second reason they get called down is you have to keep your losses small. And rest assured, there will be losses. They are not all going to work. The only place there are not losses is on Twitter and Reddit. But everywhere else in real life, there are losses. So you got to be prepared for those. And then the other thing O'Neill teaches us, and he gives it to us in those 70 um, model book stocks that he gave us, where he wrote the articles and he marked up those charts on how to trade. And I'll put that link down below too. That's called America's Greatest Opportunity, and I have it on my Twitter page, and I'll get it for you. And I even did indexes for you, so you can print those out, put them in a bound volume, and there's a index by date, page number. I think there's 3 in there, and also an index showing you the various industry groups and what years those happened on. So you've got to force feed your winners at the proper buy points. What was the other thing? Oh, Matt's podcast with Arush and Justin. I'll give links to both those things. So this is the concept. We want to make sure we water the flowers and pull the weeds, not water the weeds and pull the flowers. Because most, again, the other way of saying this is take your profits slowly and your losses quickly. And that's part of the Canslim system. So again, remember, this is just a wish list. These are not all actionable. We cannot chase. In fact, if I had to say, if somebody said, hey, what's the thing you do best in Canslim? The thing I do best, 100% correctly all of the time, is I don't chase. Just because this was drilled into me, I think it was because of Minervini and David Ryan. Both of them, when they blew up in their early days, went through all the charts, figured out what they were doing wrong, and they were both chasing. That was their number one mistake that was killing them. And remember, when Ryan says he was doing that, he didn't have Bill's book. He was working directly under Bill, but the book wasn't out when he started, and they didn't have his market smith and pattern recognition. So we have so many tools to help us not to chase. And if we're in a strong market, there's going to be another bus that comes along that'll be fine to get on. And the ones we miss, we keep on our list to study, because they are going to form a new base down the road, and they are going to give us a second chance. Our profits aren't going to be as big overall, but they're going to get us to the 20 or 25% profit goal, and we're still going to have a chance to trade them and maybe still get in and catch part of a true market leader run. So let's go back to Market Smith, and I'm going to share my list. These are kind of ranked, but they're maybe not too. But these are all Canslim stocks. Most of them have low debt. This is the only one that's over 100%. These are going to be liquid stocks. They're going to have institutional sponsorship. They're clicking on a lot of Canslim cylinders. Nothing clocks on all cylinders, clicks on all cylinders. So here is own holding. You had a prior uptrend of 50% down here. It formed a base in the due diligence days, if you study the life cycle trade book, and then it just blasted out on great earnings, highest volume ever, even higher than the IPO day, which is rare, has institutional sponsorship. And this is the one, oh, it's dropped off. But if you go back the quarter before this, Fidelity Contrafund went from like 4 million to 8.2 million shares in one quarter. So they love this one. Shockwave Medical is one. Really hadn't given us an entry. If we look at the daily chart, we can see, best place would have been to get in down here on a horizontal trend line, or even maybe here. There's a buyout rumor, so that one may get knocked off the list if it gets bought. Lantheus, this one's just strong. Look at that, 1, 2, 3, 6 weeks up in a row. A really, if you go back 6, 7, 8, 9, 10, so 9 of 10 weeks up in a row, I think. Decent volume. It's just a beast. It won't stop and won't give us an entry. RS lines at new high, price at all-time high. Just great. That'd be one. Look at that return on equity, 65%, pre-tax margin is 42%. Wow, that's just big. And I know ROE's bumped up a little bit because it does have debt, which makes ROE number higher. So Axon, this one's at all-time high, trading tightly. So I think that's a strong one. Palo Alto Networks, I think, is a strong one. Again, these are all going to have Canslim earnings and sales. Dexcom's a little light on sales, but it is 815 million per quarter, so it's a big stock setting up. This one has earnings this week, Thursday after market close. Has a little bit of overhead supply, not terrible. If they meet and beat Look at that, 1,000% earnings growth. Has fund ownership over here on the right. Got Fidelity Contra Fund in that one, and they're increasing their position. So they were in this one a long time ago when it had its great run, and now they're coming back in. So that's nice to see. So I like that one. Mobileye, they have earnings this week and the lockup expires. So we'll just see how it behaves. But I think it's set up nicely. It's just Intel. I mean, this one's a re-IPO. So it was public. Intel took them public. I mean, took them private and then spun them off recently when they came back out here. So I like that one. And then Wing, I mean, this one's in the restaurant space, but it, it's a nice looking chart, and it's got, really strong Canslim earnings and sales, and their business model. They can expand franchise business, so they're pretty strong. So those were my dream team elite eight. And again, I might lose Shockwave to the transfer portal if they get bought out. And if I have another one that I think is worthy of being on the list, I'll add it in. If I don't think it's worthy, I'm not going to add it in. It's all right. We can go with the Super 7 instead of the Elite 8. So we looked at that. Final reminder is EPS season. We're getting ready to rock and roll. So this is this week from Earnings Whispers. You can see how many companies are reporting. So the current reporting period runs from April 1st to May 15th. So this is the time it's going to be hot and heavy for at least the next 2 weeks. Really, I think the next 3 weeks. So this is this week, and then next week it gets even more massive. So a lot of homework to do, see what's coming up. Again, Dexcom is probably the one that caught my eye, and so you got to be prepared. Remember, both of these, which have done nice, I know ALGM may have triggered a sell signal this week, but these both started with gap ups on earnings. And again, can't chase, but my rules let me get in ON properly, and I covered that trading, how that happened at our last meeting. An EPS season just can always be a catalyst for the market either way. And again, I already mentioned Dexcom. So our next monthly meeting, again, if you're not going to a meetup, you need to come to one, even if it's not mine. So Wednesday, May 10th is our regular big 2-hour monthly meeting. You can register at the Stockyard Meetup site. Monthly tuition is $12, but you can attend live. You don't have to, you can. And everybody that signs up gets the recording, slide decks, links to any webinars, articles that come up during the meeting. And if you're a first timer, if you sign up for our May meeting and you haven't gone before, I send you a current copy of the April meeting, which is just 10 days old. So that's pretty current information. And in April, we were just chock full of what I call Canslim munchkins. These were just re-emphasizing key teaching points in Canslim. So Jim Ropel and Charles Harris were both on IBD Live. Oh, sorry, Charles, I misspelled your name. So there were just a lot of nuggets, teaching points that I pulled out. And then we also looked at two chart patterns, which I call rare gems because they rarely occur, which is a high tight flag, and then its nephew, the even rarer short stroke pattern. So we walked through those, did an update on the short position in Fryer Battery and why that story I think is still playing out on the short side. And then prior meetings, these are available to order. I think those are $15 a meeting. If you don't have a set of written sell rules, you really need it. I spent 3 months teaching that. I had no idea it was going to take me 3 whole months, but a lot of details. And when you're done, you would have your own set of written sell rules to start working, following, and then tweaking as you do post analysis. And then if you don't know how to do a weekend routine, I spent September and October talking about that. So those 5 are the most valuable and the most ordered ones. If you want to order one of those, you can email me at the Greenville IBD meetup at AOL.com address, and I'll send you the whole list and ordering instructions. Meetup websites on the meetup.com or Greenville Eastside IBD meetup. That's where all the educational resources are, as well as the Stockyard meetup site is really just signing up for monthly meetings. You can follow me on Twitter, and of course you currently are on my YouTube page if you're watching this, which is The Stockyard by Greg Morton. So please like and subscribe. There's other teaching videos on there In addition to my weekend review videos like this one, there's teaching on how to set up and use the group teaching portfolio spreadsheet. Our May 2021 meetings on there in full if you want to see what a whole meeting looks like. And then I did one on the 8-week hold rule, which is really an exception to a rule, not a rule itself. I have that on there also. So that's it. I'm out of here. You guys have a great weekend routine, and I think we'll be back next weekend because there's a lot going on.